I have a number of neighbors, as a matter of fact, who are selling their coastal properties in Texas because the insurance costs have gotten so outrageous. It's more than their house payments on these
Whoa.
vacation homes. And even the short term rental income does not make up for the cost of the insurance. So it impacts their cash flow significantly. So I would say if if an investor is looking at a tier one or even a tier two county property, they need to start looking at what the insurance costs are going to be immediately, because even if it's a great deal, it may not be worth what their insurance coverage is going to cost.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, folks, welcome back to the show. Today's guest, Beth Boisseau-Coots, is a commercial insurance broker in Austin, Texas. Beth, thanks for taking the time today.
Hi. Thank you. Thank you for having me. I'm excited to be here.
Now, I mentioned to you before hopping on here, I'm particularly interested in speaking with you because I come from a background of working with investors and specifically single family home investors, flippers, and then also folks who may be buying small multifamily duplex, triplex, quadplex. I know this is a large part of your book of business. And I've literally never had this conversation with them, which is, what type of insurance do you have? And believe me, I've seen lots of cases where they would need some insurance. In your perspective, and through all the investors that you work with, when do investors really most reach out to you? Is it when something goes wrong? Is it when they're looking at buying a property? When are you typically hearing from investors?
That is a very good question. It really varies. And, unfortunately, often it's kind of a last minute, oh my goodness, I've got a close date for this investment property and I need insurance and the close date's tomorrow. And that's really not the best time to go looking for your
Yeah.
insurance. Uh, so, uh, so that's all too often that is the case. I would say the best time to start looking for insurance is as soon as you decide to become a real estate investor, period.
I'd
You
like
you don't
to
even have to have a house. Just,
get
yeah.
some. Yeah. You know,
Or start looking at the options. Yeah.
I'd like to, if I can, get into the weeds a bit here with you on some of this, because for myself and other folks, there's so much that can go wrong when you're buying real estate. This is why, there's greater risk. It's more speculative, but there's also, potentially you could lose your shirt doing a flip. So of course, people, when you talk about like insurance on these properties, you're thinking about weather and things that can go wrong as far as that. Are there also types of insurance for, when like a foundation could shift or something like this that could potentially cause the property to need repairs at some point in time in the future?
So foundations are typically not covered on a property investment policy. Um, So it's going to be usually the structure itself, the roof, the interior fixtures, things of that nature. I think that when you're looking at a potential property, it's always a good idea to really take a hard look, have the inspector that you trust look at all of the components of the property so that you're not biting off more than you can chew. And with that, knowing that most property policies aren't going to cover a foundation. So if there are foundation problems, first of all, know that they're there, what needs to be done to fix it, and then you can make a decision on whether it's something that you're willing to take on.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I mean, foundation's a big deal. I mean, I've seen properties get flipped, and then once the flip is done, there's a foundation issue that was not there beforehand, and you'll see a crack running up the side of the building, and you say, that's not good. I would like to maybe pivot a bit here, Beth, and talk about when people are buying in different markets. One of the big factors is the cost of insurance in general, and how that can not just impact
Mhm.
insurance, but the price of the homes. Houston being a great example of this. I've looked at some deals in like Galveston and just different areas of Houston, and I'm like, that's a really nice. It looks like it could be a short-term rental even, but it's being sold at a price where I'm like, how's that even possible? So if we're looking at like Houston, Texas in particular, can you break down, some of the difficulties with insurance that people may be facing when looking at buying these properties?
Where should I start? Because so we've got, Houston is coastal, and in insurance, we call that a tier one property. So any county that has the county line is touching the coast is a tier one county. And then any county that's county line is touching the county of county of a tier one, I'm seeing how to say this, a tier one county is called tier two. Both are extremely difficult to get insurance in the first place. And when you do find the insurance, it's expensive. So, um, Houston, being a tier one county, is going to have very expensive insurance costs. I have a number of neighbors, as a matter of fact, who are selling their coastal properties in Texas because the insurance costs have gotten so outrageous. It's more than their house payments on these
Whoa.
vacation homes. And even the short term rental income does not make up for the cost of the insurance. So it impacts their cash flow significantly. So I would say if if an investor is looking at a tier one or even a tier two county property, they need to start looking at what the insurance costs are going to be immediately, because even if it's a great deal, it may not be worth what their insurance coverage is going to cost.
Now, is there a way where you could see this trend changing over time? Like if people were, and I don't know because I'm not in this space, but if there were more maybe like disaster resilient structures in place or different construction methods, would that potentially change the way the insurance underwriting is done? Or is this basically one of these deals where, hey, it's expensive now, but it's going to be more expensive in the future? So, buy now type of thing.
That's a good question. It's actually cyclical. So the answer is two parts. Insurance is cyclical, just like any other financial realm. And you'll see costs, go up and down according to, what the insurance costs in that area have been leading up to that time period. You'll see, in, with that, reinsurers, which are the insurers for the insurance companies, driving a lot. So if, costs have been significant in an area, the reinsurers are going to say, hey, we either don't want we won't insure you, insurance company, if you're writing in this area, or they'll put stricter parameters on it. So
if you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So, that's when you see premiums go up, you see deductibles go up, and the underwriting become more difficult. So that's part of it. The other part of it is, of course, the building materials, the age of a structure, the just the proximity to the coast, and different things like that. So, you've got a brand new wind resistant roof on a cinder block building that was built 6 months ago, then, it's going to be much more favorable to underwriters than something that, is 50 years old, uh, not well cared for, doesn't have all the same building code compliance things for
Right.
those areas.
Right.
Yeah.
It- I want to ask you, what's some of the more unusual requests that you had when it comes to insuring some of these investment properties?
Oh my gosh. Well, I mean, there's been some weird ones, that's for sure. I'm trying to think of just one of the weirdest. That was that threw
Or a
me for a loop
scenario?
there.
Yeah,
Well, one of
something
the
that
weirdest
seems plausible.
scenarios.
Yeah.
So one of the things that I do along with real estate investors, and it's actually kind of the other side of the coin, and it's a similar program in a lot of cases, is called forced place insurance. So
Go ahead.
if you don't
Dive
know
in.
what forced place insurance is, it's when a lender needs to has a borrower that doesn't keep the insurance on their property, and they have to force insurance to cover their interest in the loan, what they've lent on that property. Okay, so that's something I do as well. Well, I had a call from an attorney a few years back, and they were looking to get forced place insurance on a property that they had foreclosed on, because that's the other part of it. If a bank forecloses on a property, they would force place, and then that would add the general liability as well. Well, he was looking for this insurance coverage because he had just taken back this properties, and the deed wasn't taken, changed over yet and whatnot. Well, the reason he needed it is because there was a director of a nonprofit, and he was stealing from the nonprofit, right? And the reason he was stealing from the nonprofit is because his home had gone into foreclosure because he was also a gambler. And so he used the money
Oh
he
goodness.
stole from the nonprofit to go to the auction and buy back his house. And as when all of this came to the light, the nonprofit's insurance company, I guess they had gone, he went to jail, and then they, of course, took the house, and then they were subrogating through, anyway, so they needed through all of this to get forced place insurance on this property because this guy.
Wow. Who ended up
Anyway,
who ended up owning that property? Did the insurance company end up owning that property?
they did, and then no, I'm sorry. It eventually went back to the nonprofit, I believe. That's a good
Oh
question. I think
my
it went back to the
gosh.
nonprofit, and they sold it, of course. But you think,
That is a
oh,
crazy story.
the tangle web we weave, yeah, things like that. That's
Have you had
yeah.
anybody come to you asking for something like super granular about a property? Like, hey, can this be insured? Or hey, there's there's this super about whatever it is on the property that may be unique that could potentially be destroyed. Is that a request that happens from time to time?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Not the weirdest thing, or the most, I guess, outrageous thing I was asked to cover was a, um, I don't know who they were, but they were building a compound. It was an artist, a famous artist. He was building a compound in a very nice ski area in Colorado, and it was going to be $34 million compound, and they needed insurance for that, and that's really kind of outside of, but because I have access to a lot of specialty excess and surplus lines carriers, they thought I could help, but nobody would do it because of the fire risk. So, and because the amount of coverage
Wow.
they were asking for was so extreme.
A ski compound in Colorado, but the
Oh
fire,
no, it
you
was a
think,
family compound. It was for his family. It was going to be a personal home.
oh my
$34
goodness.
million dollars near Aspen, Colorado, and I don't know if it ever was completed or what. But when people, let's say, sometimes you'll get, investors, they need builder's risk coverage because they have decided to, do some extreme rehab on a property that's just terrible, but they've already begun the project. Well, no, I'm sorry, we can't give you insurance on something you've already started because
Yeah.
you've already started it and nobody's going to do that. So things like that, come up. But
Pivoting a bit here, Beth, I would like to ask you about aspiring investors or people who may just be getting into the space. I've heard so many folks on this show, outside of the show, talk about how investors can get started. And one of the things that I've heard time and time again, and I'm personally interested in it, is this idea of house hacking. Not just house hacking, but being able to use a duplex, triplex, quadplex, those other doors, really as income. Many people aren't aware that you can do this, but you can have that second door, a certain percentage of it based off the appraisal. That rent can be added to your income. But then, of course, one of the concerns when it comes to that is, okay, well, now that there's going to be a tenant in there potentially, is this going to maybe increase the cost of my insurance? And then as well, do I need different types of insurance because there's going to be a tenant in there? If someone is house hacking specifically, let's say they have a duplex somewhere in Texas, is there a different type of insurance that they would need than standard like homeowners insurance?
there are carriers that will allow for, okay, well, we know you that it's owner occupied on side A, and then side B is occupied by a tenant. And so they'll cover it specifically with that aspect of things. So yes, I would say though, from an investor's standpoint, if an investor or if somebody decides to become an investor with whether they're doing rehabs or rentals or a mix of both, start investigating. Okay, how am I going to protect my investment? What's the best way to do it? Am I going to, once I grow to 30 properties, am I going to have 30 individual insurance policies and, with all different renewal dates with maybe various carriers? Or am I going to be a little bit more strategic? What are the options? And get educated. What's the difference between a special form policy and a basic form policy? What's the difference between replacement cost, actual cash value? At the core of it, ask themselves, what's my risk tolerance? Am I
Right.
willing to self-insure more, or you know or do I want to pay higher premiums and self-insure less and have the insurance company cover more, of the claim? you know take this seriously enough to get a basic understanding and find an insurance professional who understands your business and you can consult with, and they can and guide you through the process and
One
develop
of
a
the
plan.
one of the questions that I have, really somewhat selfishly, because I'm curious what happens when there is, massive tenant damage. Tenants hopefully are not going to damage, the roof, but they could certainly damage, the plumbing. They could certainly damage, fixtures, and it could potentially be, upwards of $10,000 worth of damage that a tenant could do to a home. Is that ever going to be covered by some type of insurance policy if it's not like structural damage to the home?
Possibly. The It depends on the policy. Many of the policies that we write will cover vandalism and malicious mischief, and that would then speak to any tenant damage. And I would say that it's very important for landlords to make sure, or property managers, to make sure their policy has that coverage included.
Yeah, I mean, it's critical, because I've seen this happen more than, dozens of times, where you have a landlord who becomes a tired landlord because, there's distress in the property caused by a tenant. And they're like, "Hey, I don't have the, however many thousands of dollars is needed to get this up to speed right now for a new tenant." They destroyed the place. Well, if you've got some type of insurance like that in place, that is huge. It might be probably,
Oh, yeah.
costly, but it's gonna save you from having to get out of the game entirely or just have it sit vacant and you're incurring holding costs.
Honestly, Dylan, it's not that much more expensive. And oftentimes in a special form master policy, it's going to usually be included. Individual landlord policies or builder's risk, maybe, maybe not. But it is important to know. But when I see it, it doesn't really add a whole lot to the cost. The other thing I would say, and I would strongly encourage, is landlords, make sure your tenants have a renter's insurance policy, which is an HO4, because if they do damage to your property that you own, that renter's policy is going to cover up to $100,000 of the damage so that you don't even have to make the claim, which keeps your claims history clean, and thus over time reduces your overall insurance costs.
Do you help folks with that as well? If someone has a tenant, could the tenant come to you to get renter's insurance?
No, I don't do that, but I can refer to people that do. And the other option for that is some landlords will put into place what's called a tenant legal liability policy. And it's going to really offer the same coverage. The difference is the named insured is the landlord, not the tenant. And so the tenant can't, just go get the insurance to get into the property and then cancel it as soon as they're in. Because, if a lot of these folks aren't, the landlords aren't tracking to make sure the tenant keeps the coverage in place. So
Yeah,
tenant legal liability is good too.
that's what
What?
I'm thinking. It's like, well, they could have it when they sign up, and then, a month, 2 months later down the line, they could cancel it. Now they're uncovered. This is a whole other, area of conversation, because I can tell you, Beth, and I'm sure you've seen it as well. There's so many issues with people becoming, tired or distressed landlords because of a tenant that, doesn't take care of the place. And now what do they do? But we are actually coming up on time here. Any new projects that you're working on, and then also, what's the best way for folks to get in contact with you or your team?
Well, okay. So first part of that, new projects. Really, we're scaling up. We're trying to increase we've got a wonderful portal that our clients use to manage the insurance on multiple properties. And so and we've had that for some time, but technology just keeps on getting better and better. So we're really scaling up in that way, which is exciting. We're also increasing our staff because, you're only as good as your customer service. Um, and just always looking to bring on new, and more carriers that offer these types of programs so that we can stay, at the top of the game. As far as contact, my contact information, my email. We also have a website, which is www.lloyd-ins.com. And I can be reached either way, either through the website or through email.
Beth, thank you so much for coming on the show today. Thank you for taking the time.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.